Welcome to This Week in Startups. It is Wednesday, May 11th, and Jason is already on a plane to Miami, but he stayed around just long enough to do a show with me. We have got an update on Airbnb's new features. I have already started my search for a vacation involving both a castle and then hopefully a trip to the Northern Lights in the Arctic. We're going to break some of those down and talk about Airbnb's discipline as a company in continuing to innovate even into a potential downturn. Speaking of a downturn, we also dig into Coinbase's filing this morning that sent some investors into a panic in which Coinbase speculated on a hypothetical situation in which it could go bankrupt and what could happen to coins of yours that are held on Coinbase. And then we speculate on what actually could cause Coinbase to go bankrupt. Then we've got Ashley Carman from Bloomberg to come on for a quick update on what is happening in the world of podcasts, including Facebook getting in to the podcasting world and out of the podcasting world in 13 short months. It's going to be a great show. Stick with us.
This Week in Startups is brought to you by Lemon.io. Need to speed up your product development without draining your budget? Hire vetted engineers from Europe at Lemon.io. Go to lemon.io/twist to get 15% off for the first 4 weeks. Odoo. Odoo is a fully customizable and fully integrated suite of business apps that lets you build and scale your stack as you build and scale your business. Your first app is free forever, and right now, Odoo is offering $1,000 off your first implementation pack at odoo.com/twist. That's odoo.com/twist. And Coda. Coda is the all-in-one doc for teams. If you've got a stack of niche workflow tools, or if you're buried in docs and spreadsheets, Coda is the doc that brings it all together. Startups can get a $1,000 credit at coda.io/twist.
Hey, everybody. Welcome.
Hey, welcome to Wednesday. We're just getting to the top of the mountain, and we're going to have eyes on the descent.
Feel
You're
great.
here with us, and we're taking a slide down. I'm getting on a plane to Miami. I'll see you all there. I got to do a little walkthrough, check stuff, Molly. I gotta check stuff.
You are a detail beast. I am not trying to flatter you, but I've never seen anything like it.
Oh.
Like, audience, you have no idea the level of detail that Jason is aware of, brings up, thinks about. Like, it is.
Go ahead, tell him. What example stands out in your mind that's making people lose their minds?
I mean, he's like, do we have umbrellas? Do we have like a person over here? Is there going to be a this thing? Is there a room for this? Is there this? How many sandwiches are there? Whoa. I looked into this quote and there's like 6 things in here that don't make sense. Get rid of this one, this one, this one. Nobody should be charging you for that. Who is it? And I'm just like, how many jobs do you know how to do?
Well, here's the thing. I never had resources to hire anybody when I had the magazine, when I did events. So I just was like, I would just use my common sense. And people were like, okay, yeah, we'll do catering. It's $175 a person. I'm like,
you're like,
I don't explain that to me because a sandwich is $10.
Yeah.
And a soda pop is $2. So where's the other? And you give it a cookie. That's $15. And you got to deliver them. Okay. So that's $100 for the delivery. Like, where does the other $150 come in? Well, that's our profit. I'm like, you guys make $150 on it. $10 sandwich with a cookie? I mean, I'll just go buy them myself. And they're like, yeah, you can do that. I'm like, okay. And I would just hire people.
Right.
And then send them to delis and buy 100 sandwiches in boxes and put them in the front. I literally did that. I'm not doing that this time for all this stuff. I have caterers and stuff. But I will look at the thing and say like, okay, if we're going to have a gelato station, how many people is it serving? And they're just like, because people are just like, oh, do you want gelato? $18 a person. And I'm like,
you're like, I'm sorry, what now?
And they're like, yeah, it'd be like $30,000. I'm like, how many servings of gelato? They're like 500. I'm like, okay, $10 a serving, $5,000, $1,000 to bring the cart, $6,000 is the right price. Boom. And you can have like a reasonable discussion with people.
What's so awesome is it's also the fact that like you thought of the gelato station in the first place. It's not like some caterer was like, we should have a gelato station or an event thing. Jason's like, I want a gelato station. People love that. It's going to be over here. It's going to look like this. Like,
yes. Don't pass stuff. Here's the thing at parties.
A lot of spinning plates.
Leave all this in the show, by the way, because this is good stuff for people to know. You know what? Everybody wants to pass stuff. I said, enough with the passing.
That's the worst.
If I want gelato,
how the hell are you going to eat a thing?
Exactly. And then I don't want to be like chasing the person. Just tell me what the freaking gelato station is. I'm going to go get a gelato. Then I go find my wife and say, you got to try this gelato. I want to go back and find the gelato. I don't want to try to chase a waiter around. And it's a waste of time. Why do we have to have all these waiters here? Nobody wants to find the waiter to get little. It's labor. It's unnecessary. You put a gelato station. People come up. They see all the gelatos. Then I was like, hey, how about a dessert wine and some biscotti and some grappa? Set up a station for that. I like stations. The food's behind the counter. It's not a buffet. I like a station. And then they do this Italian stuff. And I'm like, this is great Italian food, but where's the steak Florentine? They're like, oh, we didn't think of that. And I'm like, come on.
Do you even Italian, bro?
I'm like, and then they're like, oh yeah, we're going to have we're going to do the Havana party. I'm like, okay, where's the churro? Let's go. Let's have good food here. So anyway, I'm like really doing the detail stuff. We're spending
the detail stuff.
$1 million.
I'm not trying to butter you up here. I'm just saying it is like watching a maestro. He's just like plate.
Yes.
This deal memo over here and the and then the the churros and the gelato.
It all comes from my dad. When I worked at the restaurant, he just told me details matter. Yeah. He was like,
they do.
The way I cut the bread and brought the butter to the table, when it got to the table, just when we took the bread and butter off the table, there was a reason you did things. And I was like pouring water over people's shoulders. Like, no. Take the glass, bring it over here, pour it over here. I'm like, I could just do it like this. And he's like, you're going to spill it on some. Eventually I spilled it on some poor lady. And I was like, okay, I'm going to do it my dad's way. Take the glass off the table, pour the water, over the ground, not over the person's lap. And it's, you ever been at a table and some busboy is like over your head with the water?
And you're like, come on, right, bro. Here too. Like it's just an armpit, right?
Too close. Yeah. Take the glass, move it over, you fill it up, you're good. Yeah. Then there's like really refined things. You got that water glass. You need to look at the glass, Molly. How much ice is in it? Okay, there's no ice left? Well, I'm not pouring water in that glass. The person's a slow drinker. Now I'm taking the pitcher, I'm turning it sideways, pouring it sideways, so I get some ice over the lip. Mm-hmm. So I get ice in their glass. Now, if their glass is still filled with ice, they're a fast drinker. I'm going to take it off. I'm going to use the little spigot at the tip. So I'm just pouring water on top. I don't need to pour more ice into it. It's going to overflow.
Wow.
It's a little detail. Yeah. So when he taught me how to pour a glass of wine, you pour the wine, and you just do a little twist at the end as you're lifting up. So you're coming up on the angle and twisting the bottle. That last little drop then spins around the top of the wine bottle and doesn't drip on the tablecloth.
I do love that. Whenever I see that, I'm always like, well, because it's the worst.
It's very simple. It's a little twist. You got a little wrist there, you get a little twist and up. Twist and up. And you keep it right above the glass. So if you do happen to, not the end of the world. A little drip in the glass.
Nobody's mad. Nobody's mad.
No, nobody even notices it. So
Rachel's
details
like,
matter,
Jason
folks.
is actually doing all of this at the All-Ins. He's going to have a wine pouring lesson. You could learn anything.
Well, I mean, listen, the poor people who have to work for me have to suffer through this as well, because I'm like, this deal memo, how did you write that opening sentence? Like,
and they do have to get the gelato stand on 1 week's notice.
The name. You got your own version of the gelato stand. I'm like, where's the stracciatella? Let's go. How do you not have
what
stracciatella?
Comes out of it? Great.
Well, I mean, experience matters. And speaking of experience, in our first story,
yes,
Brian Chesky, who emailed me today, is coming on the pod, by the way.
Great.
Emailed me today. And he was like, hey, when am I coming on your pod? And I was like, absolutely. We'll do that right after All In Summit. So Brian will be on, and we're gonna go over the history of Airbnb and the lessons he learned. So much there. I hope it goes into a two-parter. So yesterday, Brian teased, and I think you brought this up last week, Molly, that tomorrow morning Airbnb will be different.
Yep.
And I watched the video of him explaining it. You could see the joy in his face. They have been very slow about changing that product. They've been very methodical. So I don't know if we should play his video clip, or do you want to describe it first, Molly?
It's a little long.
Perfect. So we could sportscast it.
Yeah, that's
all right, Molly, sportscast.
That's
Here we go.
Perfect.
So if you're not watching, if you're listening to the pod, youtube.com/thisweekend, hit subscribe, hit the bell, and you can find this video there. All the shows are numbered and dated, but producers here, editors do a great job.
Which Jason knows because he made sure, because details
matter. But you'll see a lot of video in here. And here's the thing about details, Molly. You know what details, the trick to doing details is? You just look at each little thing you do.
Yeah.
You say, can I think of 2 or 3 ways to make it 5 or 10% better? Sometimes you can't, in which case you ask somebody else who's an expert. But if you can, then you just share that with people. Hey, would this be better? And you can phrase it like a question to your team. So sometimes you'll see me say to the team, would it be better? That's me floating the idea. Mm-hmm. Then sometimes it's obvious that'll be better.
Right.
Like in this case, playing a short clip in a sportscasting is better. It's like,
Yeah.
Let's do that.
We don't need that whole 6-minute video. It's too long.
No, people can
All
watch
right,
it on their own. So here we go.
Let's bring it up. We'll see what we got here.
Okay.
What our first clip is here. So the big thing that they announced is this change to search, which feels kind of incremental at first, especially since he was like, Airbnb will look totally different and it's going to be a magical new experience. However, it is, the more you watch this video, super cool. Like, let's just say that you were like, I don't know, I need a vacation idea. I'm going to go look for a castle. I'm really into surfing. I want to go to a really design intensive house. I want to find a tree house.
Is one of the examples. Yeah,
exactly. I want to go to the Arctic. I want a bed and breakfast. Cool. I want to go to the desert. And then it will give you options in all of those locations. So you don't even really have to pick like a town or a state. You search for the experience first.
I say you pick a vibe?
You pick a vibe.
It's a vibe. Do. The new app, Brian, team, Joe, everybody over there, congratulations. Pick a vibe. Mm-hmm. Like, if you want the Arctic vibe, you just kind of pick your vibe and you go. It's kind of like the Spotification of Airbnb.
Oh my God, it's like a roll your own, yeah.
It's like, details matter. How many times do you want to take a vacation? You're like, okay, Palm Springs. But you might just want to be somewhere hot.
Right.
You might just want warm,
and it's just the only one you know
sunny.
About.
Yeah, you're like, okay, warm, sunny Palm Springs.
Pool.
But you may not know about St. Louis Obispo. You may not know about, what's that place everybody goes outside of LA? That's like a bunch of hippy dippies. I forgot the name of it. Anyway, it's a lot of hippy dippy stuff, you can go to. And, I think it's a nice way to navigate
that's a category. Hippy dippy.
Joshua Tree is another one.
56 categories.
Which is great. And you know what?
Great.
You saw this. Sometimes the street finds its own use for technology. Shout out William Gibson. And what he meant by that was, like, you put the tech out there and the individuals will find a use for it. Mm-hmm. You saw this where people were creating landing pages or listicles on BuzzFeed. Here's the best tree houses on Airbnb. So people have been doing this for a long time, but to integrate it into the product, I think is a really neat idea, because what you're saying is, you may have like moments where you're going to All In Summit and you want something in Brickell, is it called, the art district? So you want something in, South Beach, whatever. But you also may sometimes just want to hit a vibe.
Right.
When you're scaling your startup quickly, hiring engineers can slow you down like nothing else. Don't I know it? Well, here's some good news. Lemon.io will find you the perfect candidate in 48 hours. What's Lemon.io, you ask? Well, they're a marketplace of engineers from Europe. They're going to match you with a candidate within 48 hours. And if it doesn't work out, they will replace the developer right away. They test and interview every developer to eliminate the risk of a failed project. And guess what? When you hire in a European time zone, you'll have your developers working 24/7. What a competitive advantage. So, Launch Portfolio founder Drew Fabricant, he said Lemon.io was a game changer for his startup Scout, which is a lead gen platform. Drew was under the gun to hire a developer with a very specific skill set, and Lemon.io delivered a great candidate, and they were a pleasure to work with. Not only did Drew find exactly what he was looking for, but Lemon also delivered them a second engineer just as fast. So if you could use a full-time or part-time developer to run your projects faster, go to lemon.io/twist. That's lemon.io/twist, and you'll receive a 15% discount for the first 4 weeks of work with a developer.
You want to discover. It's actually, it's like the playlist, right? The Discover playlist. It's just like that. Yeah. So your house first, basically your stay first, which is great. There are these 56 categories. And then, I love this because if you are splurging on a big trip, you may want to go to places within that trip, like spring break. I went to LA and Palm Springs. So what it will also now do is suggest split stays, AKA 2 different homes. It will create an itinerary for you. Like, okay, well, I see that you're going to Joshua Tree. You may also want to spend a couple nights in a yurt in Zion. So here is literally an itinerary in a box. What I really would love down the road is, because I just always need a tiny bit more, is if I could be like, I'm going to France, find me 3 houses in this region, and have it just be like, burp, burp, burp. Right now, it seems like it's suggesting the 2 up front. Listen, I'm not mad at this. I love this feature. It's great. It's so great that it made me want more.
Well, DoorDash has like a second order feature. And when you order from DoorDash, have you had this experience where they upsell you on a double dash?
Yeah, totally.
So
Now,
this
do you
is
want
super.
some ice cream or do you want a cookie? Yeah, the
So
hosts
they're like,
get.
you ordered your pad thai. I don't know why anybody would order that. Like, it doesn't travel well. Let's try one more time. Yeah. I don't know. You order your salad, whatever. And you, pad thai is terrible.
Details.
Whatever. Details. Like, pad thai just comes as a brick of like gelatinous goo. It's just
I've
like,
never
I don't know
ordered.
why they can't.
Yeah, that is, yeah.
Anyway, you order your ramen, Thai shokin style, where they put the broth over here and the noodles over here. And then it's like, would you like boba? Now, what they're doing is they're taking the things they know are very fast that are in walkable distance. Driver parks, get your ramen from Thai shokin, and now they go to boba guys or whatever and grab the boba. You're locked in. And so this is a very cool, like double dash kind of feature. And it will
it's great
extend
for the hosts.
Great for hosts, spreads the love around, and it's great for the experience because it is kind of cool to experience two different styles of vacation. And it might even extend your.
I mean, to book it one click, like
Yeah.
to just be not have to search, right? Like, okay, I know that I want to go to this region near Switzerland, and
There's
I know I want to
another
go to
reason.
another place. Yeah,
There's another reason. I just can't believe I missed that. This is about inventory. You ever try to go somewhere for 10 days and they're like, yeah, you got 7 days in this Palm Spring house. Yeah, but what about the weekend? They're like, yeah, somebody already sniped that. No weekend for you. What this is about is when you
Smart.
go on a 7 to 10 day stay, they know that it's hard to find 7 to 10 days in a row. So the reality might be that you then go get a hotel because they are available for 10 days, 7 to 10 days. And now you can hit, that one great house and like, oh yeah, and then how about this yurt? It might not be that they want you to go to the yurt. It might be that the killer Palm Springs, 1950s architecture house just isn't available for the weekend. And they just found you a way to book and solve your problem, which a lot of people do. They're like, oh, I got this place for 7 days. Let me find another place for 3 days. So they're solving problems.
It also seems to solve a little bit of a discovery problem for hosts too. Like I would have, clearly, and I'm curious to know on the back end how the hosts get to be
included.
How do they get
ratings and photos?
The super
they
host thing,
are
probably.
super into photos. Yeah, it's the super hosting. Your ratings matter and your photos matter. So what this also does is create a competition to get on those lists. You get yourself on that list, man. Oh my Lord. So now everybody's looking at that saying, how do I get on the OMG category? Because they got some weird stuff. Like I can pull up some OMGs here, but like people put a submarine in their backyard.
Like a train car.
Yeah, you got like a windmill. It's crazy, wacky stuff that, I want. Ski in, ski out. Well, I got that covered. Hey-oh. Little J. Cal dunk there.
But if someone wants to come ski with you, they might need to. Oh my God. Why is there an octopus tentacle?
Molly gets first shot. Talon, we take care of Talon.
Oh, thanks, man.
But your kids will get in there too. Nick and
you could stay in a windmill.
Stay in a windmill. My kids would love to stay in that alien thing.
Little UFO
flying
thingy.
saucer. Yeah, the flying saucer.
There's also, and I don't know if this was on here before, but there's camping. Was there camping on Airbnb before? I think that you could rent a campsite or glamping.
I think people were able to put their camping inventory on there, but there's Hip Camp is a competitor. We had them on the pod. Very, very smart. I tried to invest in that company. I missed it.
Yeah, that company is cool. I like that.
I think they're obviously going to go right after Hip Camp. Now, Hip Camp, I think, is land as well as like your setup, like we're seeing here.
Right.
So this is great. People want to forest bathe, which I think is actually a thing. Like hanging out in the forest is good for your body and soul, I think, for humans to just get out there. I know I'm starting to sound like a hippy dippy over here, but I kind of feel that way.
No, it's pretty good. It's pretty good. Yep.
I want to put a yurt on my property. I got a couple of acres here and I was going to put a yurt.
Yeah.
My wife
Hip
shot
Camp,
that
that's
down.
how it does work because it's people allow for camping on their private land. I also saw, by the way, as we were scrolling, that there are 6,500 houses available in the Arctic. I would like to do that. I want to go. I am now planning, as of this moment, a Northern Lights trip.
Ooh, good call. Yep. Good call.
Right?
Now, wait, how do you time a Northern Lights trip? I would like to know about that. Make sure you actually hit the Northern Lights. Like, what if you go and there's no Northern Lights and you're just like, I'm freezing up here. But oh my God, look at that.
Look at that.
So beautiful. 6,500 drones.
The one time I've been to Alaska just occurred. Like, I think it just happens more up there, but I think you can probably, sometimes they predict it.
Oh, really?
Wow, look at that. I want to stay in like a freaking glass like greenhouse.
I love these like small homes. I wish there was an investment where somebody could scale these small homes. We have Blockable, which is doing stackable homes, but not like ADUs and this kind of stuff. And every time I look at these companies that are making the ADUs, it's very bespoke, not scalable.
Yep.
I need somebody who wants to make 3 models, but they're going to start with one for 3 years, then add the second one in year 4, and then add the third one in year 6. But they just churn them out. Here's your like glass box. And they just keep lowering the price and the efficiency of it and put it on wheels.
They keep trying. I really wanted to do one of those blue homes, BLU. Like I was like, this is my jam. I'm going to buy land and then I'm going to do this, truck in the house. And they're like, you can get them off the grid. They're super cool, but they fell apart.
Listen, when you start scaling quickly, your company needs to be run professionally. And Odoo is the software that helps you maintain control of your fast-running business. Odoo's suite of business apps let you run your entire company on one platform. This means you don't need to keep adding a bunch of different SaaS products. Everything you need is already on Odoo. All you have to do is turn it on when you're ready. Odoo has over 40 main apps and over 16,000 apps from their open source community. We're talking about sales, accounting, marketing automation, HR, website builders, and so much more. Plus, if you only need 2 or 3 apps to optimize your workflow, that's all you will pay for. Again, Odoo helps you streamline by running all your business apps on one platform. That means no more issues transferring data back and forth, and you'll have one customer support contact across all your apps, not 20. And the best part? Well, here's your call to action. Your first app is free forever. And Odoo is offering a $1,000 credit on your first implementation pack. Go to odoo.com/twist for $1,000 off. That's odoo.com/twist.
And then the other thing, there was one more announcement in this Airbnb reveal, which is actually a really big deal for travelers, which is this thing called aircover, which they're calling the most comprehensive set of protections, free protections in travel. So, you book something and they always want you to spend $70 a person on insurance or this or that. And the aircover, if I recall correctly, is like, if your host cancels on you, they'll find you a new place. Do we have that? Can we pull that up, the video?
I mean, we were Airbnb host for a while, and we had to cancel on people, as is your right as the host. And sometimes it was kind of a bummer, but we'd have family in town. We had this extra house that we were planning on selling, but we're Airbnb-ing it while we were selling it. And, we'd have to cancel some stuff. And I
so
felt bad for people, but,
So booking protection guarantee, if the host has to cancel within a month of arrival, you get your money back. Check-in guarantee, if you can't get into your Airbnb, then I don't know, I guess they take care of that for you. If you find that it's not what it was supposed to be, they'll take care of it and rebook you. They'll find you a similar or better home or refund you.
Perfect.
And that's and then this 24-hour safety line and all of this stuff. But the fact that this is all included, because that is one of the big knocks on Airbnb is
rolling the dice.
You are rolling the dice a little. It's a leap of faith that you're going to show up and it's going to be what you thought it was.
You have to be an adventure traveler. That's
right.
But now when the network hits scale, Molly, at this point, when you see 50 or 100 reviews, you kind of get that sense it can't be faked.
Yeah.
And
we all know the tricks. You go for the superhost and you read the reviews and you look for the one bad review, and then you look up on Google Satellite View so you can tell where it actually is.
The satellite view wasn't part of my little kit there. I'm going to add that to my little utility.
That's a good one. Yeah, because you don't want to find out that it's in an apartment building that's all under construction, which did happen to me once in Palm Springs. And that's when I added satellite. But
I definitely go to the worst reviews and work backwards. And the worst reviews are always it's always something stupid. They're just the bandwidth was, whatever. And I'm just okay, well, it's always something I asked for a late checkout. They didn't give it to me. F you, and you're but what about the rest?
I look at the worst one and see if that's something I care about. In a restaurant, if it's food poisoning, no, thank you.
Sure. No, but I always tell people the reason why so many things are 3.5 stars on Yelp is anytime a system gets to scale, you have people using reviews as customer support. My feeling is reviews should not be allowed to use as customer support. When it's a customer support thing, somebody should flag it as customer support, say the restaurant owner. This was a customer support issue. It should move to a tab that says customer support issues and how they were resolved, not reviews. Right. So if you're at Yelp and you're a product manager, Jeremy Stompelman, everybody, somebody clip this and send it to Jeremy. It's a free idea from Jacob. I'm sure you've had it. But I want 2 tabs, customer support issues, reviews. If somebody's review is really customer support, they sat us 40 minutes late, or they forgot our dessert, whatever, then put that under customer support and then look at the unresolved tickets and resolved tickets and then have the person rate customer support.
Mm-hmm.
Because bad things happen at restaurants, right? Bad things happen at hotels,
Always.
whatever.
Yeah.
It's how the person replies to it.
Yeah.
So if they forgot your dessert or they forgot your salad and then they said they gave us free dessert, you might be like 5 stars for customer support. I don't judge customer support by the mistake. I judge it by the response.
Yes.
Which is also how I manage people.
So you don't judge the people by the mistake. You judge them based on how they respond to the mistake or attempt to remedy it. Yeah.
Correct.
Yep.
Yes. I mean, I make mistakes all the time. But if I make a mistake, I'm like, oh man, what's the lesson here? How do I avoid it in the future? And how do I make up for it? That's, I think that's the right way to judge people. So
yeah. Can you take the note? Can you improve from here?
Are you self-aware? Are you defensive? It's fine to be defensive sometimes, but at first if you're in a service-based industry, which almost all of us are to a certain extent, like we all have bosses, I have LPs, right? We have LPs. We have people in the syndicate who are LPs. Like if we screw up the K1s, which has always been a challenge for every investment firm, K1s just trickle in from companies. We just have to fall on the sword. Hey, we got to do better. If you're going to be an angel investor, we highly recommend filing an extension proactively. And every year we're going to get better at this and we're going to improve the process. But this has been this is in the weeds.
Mm-hmm.
But the one thing I've had to, deal with.
This is the tax form that you have to send to angel investors so that they can
their investment in a company,
their investment and their returns.
Some companies don't file a K1 because they don't need to, from my understanding, if there was no profit or whatever. But so when you're in a partnership, you have to file a K1. Okay, you get 300 investments, you got 100 investments, you got maybe 50 K1s coming in every year. All of a sudden, your tax returns start to look crazy, which is why some rich person, Trump or whatever's tax returns got thicker and thicker and thicker because they might have so many different investments. And then I know rich people who say, I'm just not investing in venture funds. I'm not investing in companies anymore because I just want my taxes to be simple.
Oh,
they
really?
literally are like,
wow,
I'm just putting my money into a stock index because I just don't want to deal with all this craziness and mishugana out there. But I want to just point out the great leadership at Airbnb, Joe and Brian and the whole team over there done a great job because there's chaos in the markets. And what are they doing? They're shipping features.
Yep.
And this is a lesson for you all out there. How did Brian and Joe make such a juggernaut here? I forgot there's a third founder. I forgot his name. How did they build this? The relentless focus on their customers and product. Just stay focused on your customers, stay focused on your product. It's all going to work out fine. Here we are in a market crash, complete utter chaos, blood in the streets. And what's our top story? We're just like, you know what?
I want to go to a castle. Exactly.
Nathan, for forgetting. There were three founders: Nathan, Joe, and Brian, of course.
Yeah.
So congratulations. Just keep shipping product.
These are great,
and you'll be fine. And Airbnb is up a little bit today. So congrats. In a market that's pure chaos, they're up.
I would still love a home swap because apparently I, like Hamilton, can never be satisfied. But I will say these features are cool.
Cool features.
I watched the whole video. I was like, that is, and I found myself saying out loud, oh, that's awesome. Oh, that's super cool. Oh, wow. Yeah. I would do this
is the approach I'm taking here on this podcast. I take it with our investments and, the programs we run for founders. You see Founder University, the Climate Syndicate. We're just constantly thinking how do we ship some features? I'm doing it at Inside, right? So,
And then is there ad revenue something about ad revenue? I know Nick does keep saying ad revenue.
I forgot about the ad revenue. So I guess are they letting
someone
people
asked the question? I guess
they've never had ad revenue before, and now they have a completely curated place to have it. Turner Novak had a good tweet about it yesterday.
Okay,
they have a curated place to have it if they wanted to.
Well, here's what Turner says: how much ad revenue can Airbnb generate charging hosts to boost their listings in the feed? So let's say you want it to be a featured listing. So if you go on Yelp, you go on Redfin or Zillow, you go on Amazon, you do a search. What happens, Molly? They copied Google and they have a featured listing. You ever see the sort on Redfin or Zillow is for you or something?
Yep.
Or the default sort on Amazon, whatever. They make this kind of weird sort that you can change to distance, to rating, whatever your jam is, cost, number of bedrooms, square footage. That becomes an incredible revenue generator because people have stopped searching for products on Google. Where do they search for products? Amazon.
Yeah.
Where do you search for a restaurant? Yelp. So where do you search for a place to stay? Airbnb. So if you have a lot of searches, where do you search for apps? Not on Google. You search for apps on the App Store. In the App Store, Apple has premium listings, clearly labeled. Yelp, I would say somewhat clearly labeled. Do you think everybody knows those are ads?
No.
Maybe half people do. I think
But eventually you get there, yeah.
Only like a third of people know what the ads are on Google, by the way. That's been the biggest scam in history. The FTC should come down on that.
Oh, yeah.
Remember, they used to be a
absolutely.
different color, and then now it's like there's a little ad button. You cannot tell the ads on Google.
Yeah.
And I proved that, by the way. I did a little study on that.
I will say this would be very tricky for Airbnb to implement. And in terms of host relations, like the one thing I think that has been rocky, and I know this from someone who used to work there, the one thing that has been consistently rocky for Airbnb is host relationships, like the relationships with the people who list their houses on the service.
Why?
And so if they I think sometimes they felt like the afterthought, like they felt like they weren't necessarily the ones that were being taken care of when it came to someone trashing their house or, insurance for that.
I actually had that experience. Yeah.
Yeah. I mean, I think it is improved, but they don't know, like the hosts felt really screwed by some of the pandemic response, right? In which Airbnb rightfully was like, we will let you cancel anything. You can cancel any booking. And then the hosts were like, oh, well, that's all my revenue, right? So then there's been a little bit of tension there. And I think if Airbnb were to, and we have no indication that they are, but if they were to let hosts pay for that premium placement, I feel like that could be politically a little tricky.
It could be, and it depends on how it's executed. If you're searching for Palm Springs and it says, on the right-hand column or the fifth list is like,
it says promoted,
maybe you'd be okay with it, but I don't think they need to. The marketplace functions so well. I don't think they need to do it.
So either. Yeah.
Amazon, it's a bit of a game for them because how many times have you searched on Amazon? And there's an ad at the top of Amazon. So just go ahead and do a search right now and show everybody if you're like, do a search for iPhone 13 battery pack. And when you do an iPhone, MagSafe battery pack on Amazon, whatever the choice is, like the best choice, sometimes they advertise as well. And they also have the most reviews. So if you pay for that advertising, you get more exposure. The people who can afford to pay for advertising tend to be the people with the great products. And so the best seller or Amazon choice,
or
I think
Amazon
they call
itself, which is like Amazon's choice.
Sometimes Amazon's choice is Amazon. Go figure. But like, they'll put like a bestseller note on it. And the first three are always like the paid ones. And then you go down, it's like sponsored. And then sometimes you'll see here, like there's the, what do they call that? Amazon choice, the white one there. The MagSafe battery pack from Apple is the Amazon choice. What you'll see is like sometimes those will be the ones that are actually buying the sponsorship. So there is an idea that SEM leads to SEO. Search engine marketing, buying ads on Google search would then get more people to visit your site, which would then impact the algorithm because you would have more people going to your site. You would have more traffic. You would have more links. So that's the name of the game here. And it's a little bit incestuous, right? I'm paying you, and that doesn't move me up in the rankings directly, but it does lead to more reviews, which then would move me up in the rankings. So if you and I had the best MagSafe battery charger for iPhones, Molly, and you spent $1 million on ads a year and I didn't, well, you're just going to sell more. And if all things being equal for both 4.5-star battery packs, you're going to get higher rankings because you'll get more reviews because you sold more. And it's kind of fait accompli. All right. So congratulations to them.
If you are a startup, you have to save money wherever you can. Actually, you have to save time, money, and bandwidth. All of that is why we love Coda. Coda is one doc to rule them all. In Coda, your text and your tables can live together, coexist like cats and dogs in the same doc, which means all your valuable data, objectives, and strategies are all in one place. Nothing gets lost, and your team is literally on the same page. Coda works out of the box, and it's totally customizable. You can create a wiki for your team, onboard new hires from anywhere, and of course, react quickly to any changes in your business because you just update the page. And there are templates for basically anything that you can duplicate and start using today. Check this out. Our guy Presh just made a beautiful template for our investor updates. that you can go and duplicate right now at thisweekinstartups.com/investor updates. We're already making you more productive. Join the productivity revolution and sign up for Coda today. Head to coda.io/twist to sign up and get $1,000 credit. That's coda.io/twist for $1,000 off.
All right. In other news, Coinbase released not only their results, but they released a filing that has sent some people into a panic, perhaps unnecessarily. Stock is down another 22%. This is pretty crazy. Coinbase market cap is now just above 12 billion. I'm not sure how much cash they have.
It is, I think that's at the bottom. Their total cash is 6.1 billion.
So they have 6.1 billion.
14% or $1 billion from last year. So their cash on hand is down a billy.
So if they have 6 billion and they're worth 12, the enterprise value is 6 billion for this company, which is just phenomenal in terms of, how crushed they've been. For reference, last time Coinbase was worth under 10 billion was in 2018 when they raised their Series E at an $8 billion valuation. Crypto is coming apart. But maybe you could explain this nuanced issue of, and again, with crypto, as we saw yesterday with the Luna, Terra, a lot of the stuff going on here. God bless you if that was a sneeze and if that was like a subtweet where you're like, oh.
No. That was just half and half.
I thought you were like a scam. When I said Terra, you were, God bless you, Molly.
Oh, pardon me. Oh, how rude.
Sorry. Oh, so rude of me. When reasonably intelligent people who work as capital allocators and journalists in finance can't understand what's going on, maybe a red flag.
I mean,
I'm not saying there aren't financial instruments in the world that I don't understand and that I'm some chess master here, but Molly worked at Marketplace. I've invested in 300 companies and put over 100 million to work. I think we're reasonably sophisticated, financially literate individuals who work in the field. And we can't understand some of these, grifts, algorithmic stable coins. Somebody's lending 25,000 Bitcoins and then somebody's pegged to a dollar. I mean, nobody can figure this out, what exactly is happening.
Yeah.
And then if you ask a question, people are like, oh, you're dumb, you don't get it. And it's
that's adorable, by the way. Everybody who's like, you're dumb, you don't get it. We're doing this for you, dumb.
Yeah, we try to explain your business.
Doesn't get it. We're trying to help this. We're trying to explain this so that somebody either can make money or doesn't lose all their money. Like, we're the conduit for the dumb questions. That's our whole entire job.
I mean, credit default swaps in the 2008 era, like, a lot of people didn't understand what you were doing. Like, why are you putting all these mortgages together in one bucket? Like, and should these people have mortgages and which mortgages? And you're swapping them with each other and one person's shorting them? Like, why are you doing all this? Like, isn't like a mortgage enough? Like, or like a collection of mortgages? Why do you have to carve out the subprime ones? And then why do you got to create derivatives? It's just like, whenever it gets too complex, somebody's angle shooting.
It's a red flag. I totally agree. So one of my favorite, I'll tell the story quickly, but one of my favorite journalism stories of all time, which I told in the Founder You session the other day, is the story of Bethany McLean, who was a writer for Fortune magazine. In 2001, she was at a Enron shareholders meeting. And she was like, hey, how do you guys make money? Like,
you're so dumb, lady.
And everyone was like, you're
finance
an idiot.
lady journalist is so
and
dumb.
Then she ended up writing a Fortune cover story that was like, no one can explain how Enron makes money. Not Enron, not anybody else. And that was the beginning of the unraveling of Enron, because this woman steeled herself to the trolls and was like, there's just one thing I don't understand here.
Yeah.
And that's how the you make any money at all.
Yeah.
Like,
how does
what is your
register money go into the register? You have a register? There's a bank account? Does money come into it that you get to keep some amount of?
Who pays you? So anyway,
explain I guess this is about if Coinbase were to go bankrupt, which at a time like this, okay, that's unrealistic. Let's be honest here. They have $6 billion in cash. But people were reading into this, I think, like, wait a second, why are they making this note now?
Why are you saying this? Exactly. So
let's go through it.
As part of a regulatory filing, basically, Coinbase released a filing that basically said, here's what could happen if we went bankrupt. Here's what would happen to your tokens if we were to go bankrupt. It basically said that customer tokens could be used as collateral. And Twitter user Nick Winkler at the Winkler Group says he's an on-demand due diligence platform, is what he calls himself.
Okay. I like it.
So broke this down a little bit and said, there's this new language in this 10Q warning crypto investors, what might happen to the coins.
10Q being a quarterly report for people who don't know. S1 is when you're filing to go public. 10Q is when you're doing your quarterly. So they put notes in here.
Yep. And he said, quoting from this report, quote, moreover, because custodially held crypto assets may be considered to be the property of a bankruptcy estate, in the event of a bankruptcy, the crypto assets we hold in custody on behalf of our customers could be subject to bankruptcy proceedings. And
that makes sense.
Such customers could be treated as our general unsecured creditors.
Okay, so
if you know anything about bankruptcy law, they go to the back of the line.
Yeah. Okay, so because crypto is not money and it's not a bank account, I guess, I'm reading into this, if they went bankrupt, a bankruptcy judge would look at the assets. They'd say these Luna tokens, this Ethereum, this Bitcoin, whatever's in there, Doge, is now part of the value here. And if they had, let's say, a $20 billion loan from JP Morgan, we crashed, right?
Yeah.
And they had this big line of credit. They could call that line. There's only $10 billion worth of assets. It's the Dogecoin in people's wallets. JP Morgan's the senior creditor, I guess. They are first to go out, Molly, right? Am I correct here? So they would get their money first, which I guess they're saying that would be your Doge in your Doge account.
Well, they're
it's
also
not
saying
FDIC insured.
Exactly. Like if you were a bank, or if you had your money in a bank if you had your money in a bank and a bank went bankrupt, you would be FDIC insured and you could go through some long process to get your money back. In this case, they're saying there's no insurance. This stuff is digital. And if Coinbase were to go bankrupt, it would just be considered part of the basket of assets. And the people who have a right to those assets would go way to the back of the line. And if there was any money left after all of these sort of more higher tier creditors got paid, then you might get your coin back. So it freaked everybody the hell out.
And I guess a Twitter user was like, well, listen, they got $7 billion on their balance sheet, which we just confirmed is maybe $6 billion and change.
$6 billion.
And this brave new world, WOHRLED, said they are
rehypothecating, which is a word we learned yesterday.
Yes.
Thank God, just in time.
So if we pull up Investopedia, which does a really good job at this.
They're so good.
What is rehypothecation? Rehypothecation is the practice whereby banks and brokers use, for their own purposes, assets that have been posted as collateral by their clients. Clients who permit rehypothecation of their collateral may be compensated either through a lower cost of borrowing or a rebate on fees. In other words, like you loan out your Uber or Google shares for somebody to short them, right? That would be like, I think the canonical example here, if I'm going to use a fancy word, the best example.
Or even, I think when it gets out of hand, it becomes similar actually to packaging up mortgages and reselling them as securities.
Right. So this could be a good thing, a bad thing.
Right. It can be a bad thing when it gets like resold and right when it turns into the mortgage swaps.
Yeah.
It is a very common thing for banks to do, which is you sell, in this case, they're saying Coinbase is selling more Bitcoin than it actually holds, and thereby acting like a fractional reserve bank. And so the theory that this Twitter user is putting forth about how Coinbase could go bankrupt is in the instance where there was a bank run. If everybody took their Bitcoin off exchanges, then Coinbase could be bankrupt because they would actually owe more Bitcoin to everybody than they have in reserve.
So in a contagion, like we saw with margin loans, I suppose here, if you're rehypothecating Bitcoin like a margin loan, would it be called, Molly? And you'd have to cover it in some ways? Because
that's what they're saying.
I'm reading on the Investopedia here that this was a common practice in 2007, but hedge funds became much more wary about it in the wake of the Lehman Brothers collapse and subsequent credit crunch of 2008, 2009. So this is where those controls start to get put in place, right?
Yep. And this is just, interestingly, like we said yesterday, I'm so relieved that we did that interview yesterday because so much more of this makes a little more sense now. And also points to a thing that we were saying, which is that so much of what's happening in crypto, like once you start creating exchanges, you start financializing these assets in all of the same old ways that banks do. And then you probably start to make riskier and riskier bets in all of the same old ways that like banks and the Fed always do. And you could find yourself, and again, it's still hypothetical, but you could find yourself in a situation where there's a run on your Bitcoin and you don't have enough in reserve to pay it back. And
this is why a lot of the early true believers in Bitcoin say, don't let somebody custodian your Bitcoin, get it out of there. Exactly. And in fact, I was on, all the real stuff is happening, not on Twitter now, but people are moving their conversations to the group chats.
Yep.
And so I'm on a group chat with a bunch of people. Some of them are crypto folks. And somebody said, I'm pulling all my Bitcoin out of Coinbase.
Oh, really?
And I'm going to put it on a cold storage because I was going to do that anyway. I mean, somebody with significant, I would dare say 8 or 9 figures of Bitcoin that they just have sitting over there. Yeah. Now, they don't want to sell their Bitcoin, but just on the news of this, the speculation of this, and what's happening in the broader market means people are going to essentially create a run on the bank. In other words, they move stuff out. So the
hypothecation.
Thank you. My dyslexia is going crazy.
I know.
Like this was an Indian name.
Also, I have never heard that word in my life until yesterday. And now it turns out it's the center of everything. I love a timing.
I do. I mean, I love adding a new word.
Rehypothecation. So
rehypothecation.
The fact that you know somebody who's considering taking that much Bitcoin off an exchange is exactly the potential start of the worst case scenario. So let's look at what Brian Armstrong immediately tweeted in response. Like, whoa.
Wait.
Which sounds a little, we've heard this story before. Your funds are safe at Coinbase, just as they've always been. Okay. He says that's the TLDR. Okay. And then I trust Brian. Went on to explain this in multiple tweets.
Okay.
We have no risk of bankruptcy, he wrote. However, we included a new risk factor based on an SEC requirement called SAB 121.
Oh, the SAB 121.
SAB 121, which is a newly, I don't know either, but I like how you call it SAB because it makes it sound like you totally know.
Yeah.
Which is a newly required disclosure for public companies that hold crypto assets for third parties. So this is part of
regulations.
New SEC regulations. It's coming.
Okay.
We believe our prime and custody customers have strong legal protections in their terms of service that protects their assets, even in a black swan event like this.
Okay,
so
great.
Let's parse this because he's saying there's a tier of customers who are going to be at the front of the bankruptcy court line.
Got it.
For the rest of the chumps, for our retail customers, he writes, we're taking further steps to update our user terms such that we offer the same protections to those customers in a black swan event. We should have had these in place previously. So let me apologize for that. Yeah.
Okay.
So that's good.
Okay. So I think what this means is they have people who pay them to custodian their coins. And they are paying a fee. So if you were like a treasury, like remember when Tesla bought a bunch of Bitcoin? I don't know if they use Coinbase or not. Somebody can look that up. But a lot of times people who have treasuries, they will pay a custodian fee. I think it's like 50 basis points or 1%. So if you have $1 billion over there, you pay them $10 million a year or maybe $5 million a year to make sure your coins are safe. And they are the custodians of them in some, abstract way that like they're not assets of Coinbase. They're like watching them in I'm going to use an analogy here that's imperfect, but a safety deposit box. So if the bank goes under and your diamonds are in a safety deposit box, no reasonable judge is going to be like, oh, well, that's an asset of the bank. It's like, no, they were charging you to store them here. It's not like they were, there. So I think it's kind of that kind of situation. And then maybe the retail customers didn't fall into that because they're not paying for it, right? I don't think retail customers pay a fee to be custodians and get all these extra things. It's sort of like when you get free software, you pay for Gmail. If somebody hacks your Gmail and deletes it all, which people have been doing, that's like one of these great Bitcoin hacks. Happened to a friend of mine. They deleted all his Gmail and then said, hey, if you want your Gmail back, pay us like $100 kind of situation.
Lovely.
And you call Google, there's no phone number to call. Now, if you were using Google Docs, they would have backups for you, no problem. We'll restore it. You're paying us $50 per user per year, $100 per user per year. That's our delight to go restore your email account for you. That's what you're
Right.
paying for service. So in a free service, maybe they don't offer that kind of stuff. So it's two tiers of
that
service.
would be like, that's me, right? Like, so
Yes.
I have my tiny
me.
little,
Yeah.
you know, I was like, I will risk $1,000 on this.
I'll put $1,000
So I have
on
my-
black, sir.
I have my teeny tiny little portfolio on
Yeah.
Coinbase. I don't pay anything to Coinbase. I just
No,
went
of
and I
course
bought,
not.
you know, a various little diversified portfolio of coins, and it lives there. And so
But would
I'm
you pay $10 a year to have, would you pay 1 basis point to have like this kind of backup service, like where it's
Well-
really strong and you get better VIP? They'll pick up the phone on the first ring type situation 24 hours a day.
I bank with a bank that does that and includes FDIC, and you know, so like
Yes.
the question is Coinbase
Fair
a bank?
point.
Like fundamentally, we're going to be starting to ask this question more and more and more.
And
Is
this is
Coinbase a
why-
bank? And if it's doing all the same financialization, if it's
Smells
loaning
like a
out more tokens than
Quacks
it
like a duck.
owns, exactly.
Walks
I'm
like a
getting
duck.
a real quack
Yep.
quack feeling here.
I think they want that. I'll be totally honest. I think right now, given the state of crypto's in full free fall right now. Nobody trusts it. If this Luna thing goes belly up, if Tether starts to shake, I saw some rumblings on Twitter about Tether. Maybe they're going to depeg, and then USDT did and Luna depegged
hmm
or broke their peg. I don't know.
And there might be, depegged, and then there might be a lot of like institutional investment behind it, trying to prop it up.
I'm not making
to
any
keep
more
it pegged,
pegging
and
jokes. I'm just making that clear here that we know.
I used to peg my pants in the 80s.
Yes,
Is that what we're
I don't know
talking
what
about
that
here?
means either. I don't want to.
What? No, that was when
Too many.
you fold and twist, and then you get the little like the.
Oh,
little
I did
roll.
that too. Sure, of course. And I had my
You didn't
penny
call it
loafers,
peg?
and I didn't call it pegging, but
Oh.
or I didn't peg them.
Regional.
But I had my penny loafers, which I would put 2 New York City subway topings into. And
So
then
cool.
if I was running for the train, I would take them out of my penny loafers like I was a superhero, like I was Spider-Man, Peter Parker. I'm running for the train. I'd lift my shoe up, grab the token out of it, boom. All the times I just hopped the turnstile.
I just took my horse.
There you go.
Just kidding. Like our childhoods were so freaking different.
I know. It's like a country girl and city boy.
It
Could
really
they make
is.
a
I'm just like-
podcast work? Somebody's going to make like Henry Bellcaster's making a video now. All
my
right.
goodness.
Listen,
All right.
crypto people need regulation today. ASAP. They want it because this is going to be a really challenging time for them because I think retail investors, just like they don't trust the stock market right now, and they're feeling like, do I want to trade stocks? Maybe these things are all a scam, blah, blah, blah. Exactly
Yep.
what happened after the dot-com bust. Guess what? That's how people are going to start. That's how people
Yes.
already feel about crypto.
I have
And-
already, the reason I put $1,000 total into crypto is I've already been through this story once. Remember my story about the 300 Bitcoin that I bought at $1 each?
Yeah, exactly. You went
Using
there.
an exchange called Mt. Gox
Oh,
and
me
a
too.
middleman named called Dwala,
Good luck.
both of which got hacked.
All right.
And all of that disappeared in the ether. Like, I know
am
how this
going
ends.
to excuse myself, Molly. I have
Yes.
to go to Miami.
Yes, you do, sir.
For everybody who's asking, we are going to release all of the talks as episodes on the All In feed in real time. Producer Nick, make sure you have your squad ready to go.
Not in real time. Impossible to do in real
Well,
time.
I should say shortly after. So,
As soon as they're ready.
and I say as soon as they're ready, like the day after, or the next day. So if there's
day after.
if there's 15 of these, maybe over the next 7 days, 2 a day would be great for me. If we
And then the audio will be out quickly.
yes.
The video will take a week or
Yes.
so because the files are so huge that it takes a while to transfer.
So hopefully the all-in stream goes right to the top 10. We're trying to goose it. So we just have all 14 talks come. And, like for the press and everybody who wants to come, like we're just going to, have it. We don't have room. I took the money instead of giving you seats. That's
There you
it.
go.
You get I sold the tickets to the fans for $500 each and to the capital allocators and CEOs for $7,500 a piece. So sorry to the press, but if I let 50 of you in, that would have cost me like $500,000. It would have cost me $300,000. Like you can listen to the audio feed.
All right, go get your flight.
That's it. That's my feeling at this point. I'm done. I'm taking the cash.
Yeah, good for you.
all right. Molly,
See you there.
You have number one. You have the helm.
Aye, aye, Captain.
You have the helm. Who is that? Who is that? Picard
Safe
to
travels
Picard
to number one.
Riker.
Riker.
Riker was number one, right? All right, Riker, you have the helm. I'm gonna go get some Earl Grey tea.
Onward.
See y'all later.
Onward, boss. See you in Miami.
Yes, ma'am.
Do that. Definitely do that.
All right. Goodbye, everybody.
Ashley Carman, thanks for coming back to talk about Facebook dropping podcasts, which was your scoop and led, I think, more than one of us to say, wait, Facebook had podcasts? What did I miss?
I didn't know about this.
Apparently not. When did this give us the background on Facebook podcasts?
Yeah. So last year, Mark Zuckerberg announced a bunch of different audio initiatives, including maybe you remember like Sound Bites, which was like the short form audio they wanted to launch, kind of like the TikTok of audio, Live Audio Rooms, which was their Clubhouse competitor that kind of got the most attention. They launched an audio hub, and then they launched podcasts on the platform, which is not like a podcast network where they're spending money to buy podcasts, but more if you have an RSS feed, you can distribute it through Facebook and people will be able to listen to your show through Facebook. So they discontinued pretty much all of that except for Live Audio Rooms, which they're just folding into Facebook Live. And that was the news. And that came basically a year after the announcements.
Got it. And do we think that that was partly because no one knew it was there, or that people didn't necessarily want to consume audio through Facebook?
So it's pretty funny because prior to them shutting it down, I actually published a story maybe like 2 weeks before talking about how they seem to be pulling out of the space, primarily because from what I heard, they were focusing on other priorities. So like Reels and the metaverse, shopping. So I think my best guess would be that, those just took precedence. We've seen some other reporting to suggest that. And I would imagine that audio was kind of like a long-term bet that maybe just wasn't paying off immediately.
Right. So it was maybe just a business discipline thing. You have to really, if you're going to, like Spotify building its podcast business has involved a pretty massive investment up to and including exclusives and paying $100 million for talent.
Exactly. So I think, you can build a podcast player. They did. I am curious, why they didn't want to just keep the player live if it's just like supporting RSS feeds that already exist. But, I think they just put people on different resources. Yeah.
Well, then let's talk about the podcasting space getting more and more competitive because last time we were here, you shared your theory that Spotify is gearing up to go head to head with YouTube. YouTube, since then, like side note, behind the scenes, has reached out to us to see how they can better support us as podcasters, not just video. Spotify's team is doing follow-ups as well. Like, is this the fight that YouTube didn't necessarily see coming?
I don't know if they didn't see it coming, but at the same time, like they've had podcasters on YouTube forever. And so I think they just kind of like had that and they were happy with it. And then maybe they recognized like, oh, if we just fold audio only into this as well, maybe there's an opportunity here. So I think they kind of just didn't seize that and really probably saw themselves as a video platform first. Right. So I don't know if they I doubt they foresaw Spotify coming for them necessarily, but I also just don't know how well Spotify's video product is really going over. I'd be curious. Like I always say, you and I need to chat off the podcast.
I know, I really do.
I need to get your email.
We really do. We'll make that happen. We'll definitely make that happen. You also wrote about Spotify's podcasting architect leaving. What are you hearing about what's happening there?
Yeah, so Courtney Holt left. And since then, so basically there's been like 3 prominent departures from Spotify. There's been Courtney Holt, who left. He kind of helped spearhead Spotify's entire podcast apparatus. Lydia Polgreen left from Gimlet. She was
back to the New York Times.
Yeah, she went back to Times. It sounds like a great gig. Makes sense. And then Mike McDonough, who started the app Anchor, he is also leaving as well. So it seems like there's some big names leaving. It's tough to say whether it's something where it's like, well, they bought these companies. Phase 1 of Spotify's podcast efforts is kind of over. They're entering now, like proving out the model versus like entering the space. Or if it's just like, well, the options vested, the contracts ended, people want to do new things. It's tough to say. I am very curious who they bring in and kind of how they restructure the teams there.
I know. I wonder, that hire is going to tell us a lot about whether Spotify plans to continue with an audio first play or really go hard for YouTube in that video space, right?
Because it sort of feels like first.
I think so too. And it sort of feels like what YouTube is trying to do is say like, we've already dominated you in video. We're going to try to dominate you in audio. And so Spotify should probably stick to those guns because there's no universe in which they're going to come for YouTube on video.
Yeah. It's just going to require a lot of different back end work, as you know, like manually updating a video to Spotify and YouTube and doing your audio as well and checking your stats and your analytics across platforms. Like it just becomes this really big endeavor that I think unless you can prove the audience is there, specifically with video on Spotify, might be a tougher sell.
I literally see producer tears in our chat right now. They're like, yeah, we know this all too well.
Yeah.
Well, I wonder too how much some of this shuffling and maybe like an increased focus on video, because Spotify does seem to be sending signals that it wants to be like a media company, is about this painful fact that I feel like I've had to confront since 2005 when I started podcasting, which is like, doesn't make that much money. Like, has anybody figured out how to make actual money in podcasting other than be an IP studio for Hulu?
I don't even know if that necessarily pays the bills. I mean, it's nice money to have. I'm skeptical that can like support an entire company, but yeah, I mean, that's the big question. So since we last chatted, Spotify recently had its earnings. Its stock reached the lowest levels it's ever been. And a lot of that had to do with investors just not believing that this strategy was working out. The big thing they have to pull off is really monetizing the long tail of podcasters. So getting the smaller anchor creators, maybe shows that aren't on anchor, but are just like, smaller size, be able to monetize those in addition to the big whales like Joe Rogan. They really want to take over the ads business. So until they can prove out that ad world is working, then I don't know how easily they're going to make money in the space.
We talk a lot about the kind of the standards situation and the idea that Spotify, in order to be successful, will probably have to break podcasting, right? Like there isn't any way to build a more full-featured ad product that I know of without making your own distribution standard, right?
Yeah, I mean,
has it come farther than I thought?
They definitely promote their streaming platform. And so they definitely want you to be streaming and not downloading. That's like a big change. I would say they seem to be more open about doing windowed content. I think Daniel Ek mentioned that on one of the earnings calls earlier this year. So I don't think they're doing the full exclusive strategy.
And then we talked about this last time as well, but just as a like state of the competition, how is Dark Horse Amazon doing? It seems like they are actually really creeping up in usage.
Yeah, it's tough to say. They don't share a ton of metrics. Amazon Music, obviously you can access it through Prime, so they don't typically share much data about that. But what is this tweet from?
What? Come on, guys. Oh, this is because I said Amazon was buying, Amazon's been buying ads apparently for the All-In pod.
Like targeting against?
Like targeting against this specific podcast. So they are getting aggressive, it seems like, and getting people to want to come and listen.
Yeah, they're doing their best. I mean, they have one very under their belt.
Jason.
They haven't been making as much noise as Spotify, but they definitely have made some acquisitions in the space. They launched a live social audio app called AMP. So they're making audio moves, and their former head of podcast at Amazon Music told me that they viewed this on a decade-long business plan. So it seems like they're pretty committed to the space.
Which, anytime Amazon comes into your space with a long play, they can outspend you, right? I feel like even if you're Spotify,
no one's worried about that.
Amazon is going to outspend you, and we'll see. So what do you think? Okay, who else though? You've also done some reporting, like who else is sneaking into podcasting? You reported that Substack poached one of Patreon's top podcast execs. So like how many people, is this the pivot to podcast?
I think it's basically just that all these various creator platforms see subscription as an opportunity in podcasting, and they see like the fervent fan base that podcasts have. And so they're really trying to go out there, and I mean, there's only so many that have that fervent fan base. So I think they're really trying to find the ones that do and maybe take them over to their platform. So in Substack's case, they've poached some Patreon creators. I'm sure there's other creator platforms out there that are looking to do the same, either from creators who are like on YouTube and maybe bring their exclusive videos to their platform or something like that. So I am sure they're out there, but really it's like a creator play.
Interesting. Are there enough? I know there are a lot of creators. How are we feeling about talent?
Yeah, I mean, I think there's enough. I think it's just tricky because, as you probably know, like podcast marketing is really difficult. It's not as easy as, all marketing is difficult. It's hard to get people to take action on something, but really it's hard to get action to get people to listen to a show. And there's not a great way to really algorithmically promote something. So that's where YouTube could be interesting too.
It could be, right? Because it also has the infrastructure to incubate and train talent. Because it seems like the Spotify model in some ways has been not so much to like grow new podcasters, like plant a whole new garden. It's been to say, oh, you already like these people. Right. Listen to them here instead. And there is a difference in the platform approaches, like
totally
grow a whole bunch of new seedlings or just like plant an already established tree. And we don't know yet, it seems like, which I guess we'll know in 5 years. I don't know which of those models is more effective.
Totally. Yeah.
When in doubt, double down on celebs seems to be the
business plan. They're busy. They got stuff to do.
Yeah, that's true. That's true. And they don't always draw like you think. I think exclusivity is not the be all end all as some of these platforms are discovering.
So
yeah. Well, what do you think? Like, we're going to just do sort of regular predictions. As you see right now, Spotify struggling, YouTube coming in hard, Amazon slow and steady and dangerous, and then this kind of other ragtag collection of podcast pivoters. Do you have some winners in mind?
I don't have winners necessarily. I do think there's enough to go around, especially when you're a platform like Amazon where you don't need this to totally make your business. But it could be like a nice little cherry on top, or it could do some marketing work for you and your shows or something. I'm very curious about Spotify. I think that they've made some aggressive moves to, as an example, acquire companies. I think that's the last time I was on. Acquire companies in the ad attribution space. And I feel like I actually published a little story about this, about the industry isn't just like taking that sitting down. They're actually starting to really build third-party competitors for attribution. And I think that they're moving pretty quickly. So that has been like a surprising twist to me, just because I think we're seeing platforms try to dominate and then the industry being like, actually, we really don't want you to do that. And I'm curious how plays like that will actually end up potentially hurting them.
Right. Nobody ultimately wants the silos and the exclusivity, even though that might long term be the only way to make any real money here.
Totally.
It's such an interesting trap to be in. And then when you look at Spotify's moves to become sort of a bigger overarching media company, are there any warning signs in, let's say, Netflix?
Like
paying for stars is a black hole.
Yeah, subscription money is tough. I think, I don't. Yeah. I think it's going to be tricky. I think getting people to pay, if they can get the global audience down, I think audio is a place where they could succeed. There's not that many people fully dedicated to it. It's just a matter of like, can you get people to pay for your subscription revenue? Can you get them to listen to the ads and not skip? Can you bring advertisers in from around the world? Can you continue to thrive in different markets? That's really going to be it. And can you make hit podcasts in case, you can't pin it all with Joe Rogan? Like if he leaves, what happens then?
Yeah. I'm glad I'm not in this business. Bloomberg's Ashley Carman covering.
I am going to get your email because you are in this business.
Our producer, it's on my Twitter bio. It's literally it's just right there. Just email me. Yeah.
Okay.
All right. Awesome. I will see you in my inbox, and then we'll see you next time